Good morning, everybody, and welcome to SFI Live. We're back, Series 2, Episode 2 already. It's gone around so quickly. A good morning to everybody. We are going to be touching on self-build once again, self and custom build, should I say once again. This time with a slightly different approach. We're trying to introduce a few more of you to the wonders that are self-build and get a little bit of information from our very special guest, Mary Riley, who I spoke to yesterday, who has got some comments from your side of the industry as opposed to ours on some facts and information. Now, we'll go into that in a second. We are an interactive webinar. The chat room is open, so please do pop any questions on anything we're talking about into the chat room. I'll put those to either Tony or Holly. And also you will get a chance to see Mary, see her comments, and we'll talk about those. So any questions that come from what Mary has said, again, just pop them in the chat room and we'll be delighted to answer them. This is a CPT webinar, so if at the end of the show, we will ask you to just comment if you'd like a certificate to take away at the end of the day, and we'll get those sent out to you. So that's enough from me. Quick introduction. So I'm Jay. I'm just the host today, but I'm joined by Tony. Morning, Tony.
Morning, everybody. I'm Tony Hall, Head of Mortgage Sales here at Saffron. Just celebrated my 34th year in the market, and a lot of that's been in the specialist arena.
Lovely. And the lovely Holly. Morning, Holly.
Morning. I'm Holly. I'm the Intermediary team leader here at Saffron. So I look after the telephone-based BDM team. So we have 5 in the team at the moment. And yeah, I've been at Saffron for six years, 5 years in the mortgage team.
Thanks, Holly. Okay, so as I did say, we are talking about self-build today. So if you do have any questions, queries, anything at all, even comments, we would be really appreciate it if you could pop those into the chat room, because it makes this a bit more interactive and a chance for us to answer your real life questions. So just a little summary on what we're going to talk about today. We're not quite having the self-build revolution that other countries have had, but we're on our way to trying to catch up with them. And the UK government at the moment are throwing all sorts of things at the industry. So they're making brownfield and local council areas available to developers, which will mean an opportunity for self-builders as well. We've also got the Help to Build scheme, which is coming. It's been talked about, so Mary will touch on that. Mary is from NaCSBA, so the Self-Build and Custom Build Association. So she's going to provide us a little bit of insight into what's going on in the market and how the market's going to work. So that's enough from me. Let's pass over to Tony. First question to you, actually. We're talking about self-build again, but for good reason, right? With this focus from the government, this is a good opportunity for brokers, is it not?
Yeah, huge. I mean, I think we'll discover today that the awareness amongst the general population is still low with regards to self-build, and particularly with custom build, which is probably more the obvious route for the first timer, shall we say. But as you quite rightly said, the government is committed and is opening up avenues for people to have a go at this themselves and make it more mainstream. So it's, if you're a broker that's not looked at this before, there's a huge opportunity arising from you. And, there's a lot of lenders, and particularly ourselves, that are really passionate about self-build and custom build and can help you and your clients every step of the way.
Lovely. Thanks, Tony. Holly, over to you for a second. Before we hear from Mary, what defines a self-build project? So from a broker's perspective, what can you say? What just sort of overlies that self-build message? What sort of projects are we looking at?
So for self-build in particular, you'll be looking at your applicants wanting to live in the property. So they're looking to build their dream home either from the ground upwards, or they're taking a project maybe on midway through, or as well as self-build doesn't just cover that kind of self-build project. It also can cover custom build, where they're purchasing from a developer and they can then work with them to do all the internal layout and they have it built for them. And the other one is we can do large renovations on self-build. So they're buying a pretty rundown property and they're looking to then sort of make it more habitable, make it into the property that they're looking for and get funding for it. So it kind of falls into those 3 categories under our self-build. But the thing that you're looking for is that the applicants are looking to live in it themselves.
Great stuff. Thank you. Okay, so we're going to go straight first off to Mary. So pay attention, Holly and Tony, because they haven't seen this, guys. So what we're going to play, we're going to talk about Mary's comments afterwards. But let's first of all hear from Mary Riley on talking about self-build projects.
Yes, I do think that the government's plans to
Sorry to cut that short. I was just reading in the chat room. Apparently, everybody couldn't hear that, so I don't really know what was happening there. So we'll give it one more try. If not, I do know what was said, so I can still put the questions to the panel. So let's just try one more time and see if you can hear it. If you can't, we'll just skip. Just bear with me.
I do think that the government's plans to encourage self-build and custom build.
It's cut again, Jay.
Sorry about that, guys. It looks like we're not going to get audio from that video, so I do apologise. So let's go straight on to the questions about what Mary said. I'll try and remember what Mary said so you guys can pick it up. So let's talk about, first of all, Tony, the housing stock issue. Mary did talk about in that video that sadly you're not getting. She did talk about the fact that this is an opportunity to really focus on the housing stock, the lack of housing stock, and an opportunity for people to look for a piece of land and get a building up really quickly, and it needn't be that stressful. Is it the answer to the current housing stock crisis?
Well, I think it's one of a suite of measures that's going to support housing stock.
I think we are being plagued by technical issues this morning.
Yes, it looks like
so apologies to everybody on that one.
I'm back. I'm back. Apologies. Everyone's still here.
Yeah, the gremlins have got. So I think yes, it is certainly. It's
Hold
not.
on, we've lost the audience as well. Bear with. They're back. There we go. I think we're going to have gremlins in the system today. I think it's been one of those days. So welcome back, everybody. Sorry, Tony. Carry on with your answer.
No worries. I'm used to talking to myself anyway, so it doesn't make a lot of difference. I think it is definitely part of the answer. It obviously isn't the whole answer. Self-build and custom build has been part of the government's agenda for a number of years, but it's never really gained, any traction. And I think we're still at that point where we haven't met housing demand in terms of build since 1979. So it's a long time since we actually built the amount of new houses we need. So I think this is an opportunity for the SME builders to step into that space and really start helping and looking at those sites. Because I think custom build in this environment is probably the more obvious and safer route for people. And I can see people custom building and then self-building as a phase 2 move once they've got comfort with it. So yes, I think it's an exciting opportunity for people. It's still a big, scary jump to actually, think about, gosh, building my own and all that comes with it. But actually, the support available to you and the prevalence of, as you've said, land now being made available by local authorities, et cetera, means it's never been a better time to not worry about the large builders not building houses, or the fact that people aren't selling houses, or the fact that you can't afford to buy a pre-built house, and look at the viability of building your own.
Well, just before we jump to the next question, Holly, just to pick up on the custom build, do you want to just talk about the sorts of custom build projects that you can fund at Saffron?
So it's any type of custom build project. So what you'll be looking at is a developer might have a set of custom build plots, or they might have a whole site of custom build plots where you can buy either the shell of a house, or you can buy the sort of the design and the planning permission, and then you can do all the internal fit out. So it's just really, you're not doing the full self build yourself. The developer's doing it for you, but you still have that kind of design. And you can make it what you want effectively. So it's a little bit like self-build, but with a bit of hand-holding with it.
Okay, let's just revert back to the housing crisis and the housing stock crisis. Surely a first-time buyer can't get a self-build mortgage, can they, Holly?
Well, actually, with Saffron, they can. So our project, put my teeth back in. Our product at Saffron for self-build is allowable for first-time buyers. So, you know, and it just can give some first-time buyers the opportunity to build something that they may not be able to afford sort of as off-the-shelf property. So they can build something a little bit bigger. They can maybe get an extra bedroom if they're working from home. They can do, you know, their office space that they need to. So it really does give them the option. And, you know, for first-time buyers to do a self-build, it can sound scary, but, you know, Tony mentioned it earlier, but the amount of support that we can give, and also that they can get in the wider market, really allows them to be able to do it and do it with confidence. You know, they'll be going to an experienced project manager, an experienced architect. We hands-on at Saffron, we help on from hands-on from start to finish. So, you know, we'll help with the beginning process of getting the application through, but then once they've completed and had their initial tranche of funds, we will then, our underwriters will keep in contact with them every 3 months to get a build update. So we like to keep hands on, and if they have any questions, obviously they can come back to us too. But yes, it is available to first time buyers.
Lovely. Well, we'll lead straight into Brian's question, actually. Tony, I don't know if you want to handle this. He is doing a self-build with Bill Loan. I don't want to branch out, but I had to. Seems to be a world of pain, in his opinion. What's the difference with Saffron?
Well, obviously, I can't comment on the particular situation of that case with Build Loan. But I do believe that, well, the difference with Saffron is obviously you don't, you know, Build Loan is a third party in this arrangement. So a lot of lenders will use Build Loan as their, in effect, packager for this product, because they don't have the expertise internally necessarily to handhold it all the way through. So what differs with Saffron is we've got experienced underwriters that have been underwriting self-build business for a number of years. And do you know what? Actually really love it. They love getting the complicated inquiries. So they really will give you their heart and soul. And as Holly said, we will help manage the project from start to finish. It doesn't just end when the first stage payment is made. You've got somebody continually checking up on you, making sure you're okay, seeing what else we can do to support. So I think probably that's one of the differences.
Okay.
Thanks for that. Brian, that helps. Yeah. So
Brian, I hope that helps. Likewise, Brian, if you want to drop a private message with contact details, I can always ask one of the guys to pick up with you and have a chat. Do you think there's, with this sort of push on self-build, do you think the government have done enough to link it with the green agenda? I know we've got Saffron a green mortgage, but people are really looking at the house they're moving into now and actually looking at them and saying, does this suit my own personal thoughts on the green agenda? Do you think that self-building helps to push a greener housing market out there, Tony?
I do, because you know, a lot of the self-build is using modern methods of construction, which are, you know, more sustainably resourced and sourced and are more energy efficient. You know, a lot of the heating systems, the heat pumps and everything like that. So yes, I think these houses are built with the environment in mind. You know, I don't think I've ever seen one built that's just gone, no, bricks and tile, that'll do, you know, never mind anything else. It's always with that focus on it. So people have got that mindset behind doing it. You know, and I think that, yes, the government do provide opportunities, but I think they could do more to support green and self-build as well at the same time, to make it even more of an obvious choice in the, you know, out of the routes to go down.
Yep. So that leads on quite well, actually, to Holly. Modern methods of construction. Is there anything we need to look out for and think, oh, no, that's not yet feasible, or are you pretty flexible?
Well, to be honest, we've got more and more flexible because there's so much coming to market, so many different types of build types, so many different types of eco methods. So we've sort of, it's kind of education for us as time goes on. So the key things that we look for, and I will say this slowly because I know I have a habit of saying the important bits really quickly, but they can either, as long as the build method is BOPAS, which is BOPAS, or BBA or BRE accredited, then it's something we can look to consider. They must have a minimum accreditation of 65 years for us to be able to consider as well. That's a key little bit because there's quite a few that might have that. They might have that accreditation, but maybe not have the longevity going with it. So it's one thing to look out for, but we can consider all sorts. We've done Huff houses, use the passive house construction methods. That's mainly sort of more eco-friendly. SIP panels we've started to look at more and more. So there's a lot of different things, and there's a lot of changes in the market. There's I know that there's a lot of sort of exhibitions hopefully coming back in the next few years of now the pandemic sort of easing off a little bit, where they have specific like the self-build shows, and you can go around there and they've got every type of construction method you can think of.
Brilliant. We're getting some questions coming in. Guys, this is what we're for, so don't be afraid to pop your questions in. This is what we're here for. We could waffle on forever about what we want to talk about, but we're here to talk to you. So from Ben Roberts, again, Ben, prime reason why we're here was a little experience with self-builds. We're here to help. So fire questions. Can you use the loan to buy the land as well as fund the build? I'll go to Holly.
Yes. Thank you. Yes, so we can. So with our self-build, it depends on what product in particular they go for. But we have 2 loan-to-value brackets across our 2 products. So you've got one where we lend up to 65% of purchase price, but 100% of build costs. And that cannot exceed the borrowing of 75% of the gross development value at any time. And then the other product is our 80% product, where we can do 80% of purchase price, 80% of build costs, and cannot exceed 80% of the gross development value. So these products are a discounted rate for 24 months, and you can do them on both interest only and repayment as well.
Lovely. Look at these questions coming in. So a question from Gemma. With custom builds, do you limit the number of plots allowed on one development and your own risk exposure?
Yes. So on multi-plot sites, we usually want to see at least 50% of the plots completed, if not more or near close to completion. And when we can consider them, we usually can only consider a percentage of the plots. So it's usually about 10% of the plots on site. So it just depends on the area. For example, Graven Hill, which I know we'll probably talk about later, is one of the biggest self-build and custom build sites. And we can consider certain custom builds in that area. So if anybody does have any particular ones, we have set areas in the custom build section of Graven Hill that we can consider.
Lovely. Sorry. Thank you so much, guys. I've put a poll up just to ask which of you have worked with Saffron, which haven't, so we can tailor our questioning. There will be polls randomly throughout the show, so do feel free to fill them in. It's really helpful for us. So I hope that answered your question, Gemma. Stephen, I will obviously speak to Holly and Tony. We'll get someone to get in touch with you. So back from Brian again, will it start on interest only and then change to repayment, Holly?
Yes. So we actually have a really great perk with our self-build product. So if the applicants were to choose a repayment mortgage, they can have, we can make interest only manual payment adjustments. So during the build, they'll only pay interest only. And once the build has been signed off, it will then revert to repayment. If they are looking to take that perk on, then that won't show through any of your documentation until you get to your offer. And it's an offer condition on there. So just something to bear in mind, that you would apply as a repayment mortgage, but then state that they want the interest only manual payment adjustments, and we can do that.
Brian's, sorry guys, I'm not skipping all your other questions, but Brian followed up on that. Is there a risk fee, and is that paid up front?
So there is some fees on the self-build product. So there is a £300 application fee, and that is non-refundable, but there is a valuation fee based on the end value of the project. And with that, that's refundable up until the point it's been instructed. Now, with our valuations, it is slightly different for self-builds. We will assess the case fully based on the information that you provide, including the breakdown of works and costings, drawings, everything that you need to provide. And once we're happy with it, only then do we instruct valuation, because we have to send all those details over to the valuer as well.
Lovely. Thanks, Holly. So Max White's got a two-part question, so I'm going to fire them both at you at the same time. Sorry, Holly, you're going to be talking for a little bit here, unless you want to chip in, Tony. Do you do ICF blocks? Raised a massive argument with the lender as regards it needed a bow pass when it did not. And also, what is your situation on new self-builds with retrospective warranties, which some people tend to undertake?
Yeah. Yeah, that's fine. So ICF is another one to refer over to us. It depends on the project itself, and whether we would be happy with it, but it's certainly one to refer over, and probably one that will be subject to valuers' comments. So definitely worth just having a chat about the case with us. And retrospective warranties are okay. It just depends on the coverage that they do have and whether they're from one of our allowable warranty providers.
Wonderful. Thank you. Okay, so that's Max's questions done. Apologies, guys. We only pulled Holly from the Matrix this morning, so she's still half in. She's trying to go back.
I tried to hit the camera, but it worked last time, but it hasn't today. So I'm just going to do the off and on button.
The gremlins are really attacking us today. We're doing our best. I have got the second video sorted for Mary, so we've just got one step closer. Right, so I'm going to carry on with the questions because they're coming in thick and fast. So I think we'll just keep going with these before we go back to Mary. From Dan Baskerville, is the accreditation to do with the builder? Sorry, he's self-build new, so he's got a potential case coming up. So the accreditation is to do with the builder?
No, it's to do with the construction type and sort of where they've got it from. So, for example, Hoff houses, that's like an off-site construction that then gets built on and then built on, and that has an accreditation behind it. So if it's like a Danwood house or a Hoff house, have a look at their website, because that will have all the information about their accreditations and a little bit more about the build itself and how it works. So it's always good to look at the construction provider.
Thanks, Holly. Sorry, Holly.
It's really bad.
They're all going to be questions as well for a little while, so bear with me. Do you fund auction plots with existing planning permission in place from Jagadish?
Yes, so we can, but what we do say is if there is a short turnaround time and deadline, so within the 28 days to exchange, we can not always guarantee that we're able to meet that deadline. So although we can consider them, we were always upfront with any auction purchase, whether it's to do with self-build or residential or buy-to-let, we may not be able to meet that deadline. There could be factors outside of our control.
Okay. Thank you. I hope that answers your question, Jagadish. From Talk, do you require clients' own project managers and builders to have a minimum level of public liability, such as 2 million or 5 million? I think Holly might be resetting. Do you know the answer to that, Tony, or should we skip on?
I don't think we do, but let's check my knowledge of policy, because that could be embarrassing.
Holly's back. She's rescued you. So does the project manager need to have a minimum level of public liability insurance, basically?
No, but the contractor does.
Okay.
So any a contractor's all risk insurance policy must have Saffron's interest noted, but it is required to have a public liability cover and an employer's liability cover of 5 million, and at least 125% of the professional reinstatement cost.
Okay, thank you very much.
All that information as well, just to let you know, and I'm sure we'll point it out a bit later, will be on our supplementary information sheet, which is found on our website.
We'll give you the address a bit later on, and we'll give you details on how to register so you can keep up to date with the new developments we've got coming up in self-build to help educate brokers. That is more of that coming up a little bit later on. So another question, development of 4 units. The owner developer wants to keep 1 unit and sell other 3 units and hence be mortgage free. I think I know the answer to this, but Holly or Tony?
Yeah, Tony.
That's probably not one for us, but it's one that our development finance team would look at, because they were very happy to fund the building of houses for sale, whereas opposed we're more about funding the building of a house to live in. So I can see it's both parties there, but it's not one that we would take on the self-build side.
If you go to the Saffron corporate website, saffronbs.co.uk, there's an entire section on development finance that talks through all that, gives you the contacts for Peter Owen, who heads up our team. Very much worth having a look at that. I think that is the line, isn't it? If you're not living in all plots yourself, obviously it's then a development. So that literally goes over. So thanks, Tony. What is the minimum qualification or credentials you need the client's own builders to have, as such as being part of the NFB?
So there is no requirement. So we don't have a minimum credentials. What we will do is do a, apologies because my camera's gone again. That we will look at the details of the builder, the project manager, find out a little bit more about them, and just, you know, if they got a building firm where we can find information online rather than sort of a one-man band builder. Because the one thing we have to bear in mind is if we were having to repossess a property, we have to finish it. So we want to be there and happy to cover.
Lovely. I know the answer as well. Do you finance build to rent, Tony?
On our development finance, we may consider. I am still here, just hiding. Apologies. We can look at that on our. It's worth speaking to our development finance team. If it's not to live in, it's definitely worth speaking to them.
And Tony, I know the answer to this. Do you cover properties in Scotland?
No, sadly we don't cover Scotland at this point. England and Wales only.
Thank you. What is the oldest age you will lend for self-employed client in admin type role? There's a bit of a jump to self-employed. We'll come back to talk more criteria questions later on. But as I've asked it for David, what is the oldest age you would consider self-employed?
We can take working income up until the applicant's 75th birthday. And yes, so up to that point, or their intended retirement age, whichever is sooner.
Yeah, lovely. One last question, then we're going to go off to listen, hopefully hear from Mary. Bear with me. There we go. So message from Neil. How do you calculate affordability as building materials are changing from week to week at present, so there may be a significant shortfall? A very good question, actually, because Brexit has caused a bit of an issue with regards to materials, and that is affecting the bottom line of a build. Holly, can you give any advice on that, or Tony?
Could you repeat the question for me?
How do you calculate affordability? It's fine. Let's get the gremlins to play around with you. Sorry, Holly. How do you calculate affordability as building materials are changing from week to week? The cost of building materials, that is, at present. So there may be a significant shortfall. How do you go around that?
So I think it's getting the quotes from the initial. Now, we are aware of the cost of building materials going up. But what you would do is they would work with either their builder or their project manager to set a timeline of funds that they do need. And then potentially add a contingency fund on the top of that. So we were able to then look if there was going to be any cost overrunning that we would then already be factored in. Now, affordability is on our standard affordability calculator on our website. So you would just run it through on there based on the end value and the total loan amount that they're looking to borrow.
Mark's got a relevant question to that as well, actually, Holly. It's really similar. It's not about money, but about time. So there's no thing for delays in scheduled build time. I presume, bad weather, things like that. With the stage payments, how does that work?
So they're flexible and they suit the applicant's needs. So they're not set on timings, they're set on the work that's been completed. So you, for example, there's no set stage payments. They're flexible for each project because we take on various different types of projects. But what you will be looking at is it could be they need to get the foundations laid. Once they've got the foundations laid, they will let us know. We'll go out, we'll re-inspect, and then we'll lend that money back to them so they can continue on to their next stage. But they have 24 months to complete the build.
Wonderful. Okay, Holly, I'm going to give your camera a bit of a breather. We're all going to turn the cameras off and our audio off. And we're going to see if we can hear Mary's second video now. I think I've sorted the glitch out on this. So let's hear from Mary Riley. I asked her how easy it's been for her and her clients to get self-build funding. Let's see what she had to say.
When we're working with clients, and they obviously, when they're self-build or custom build and they're looking to obtain a mortgage, it's not difficult. People make it actually very much overcomplicate the application process. Fundamentally, it is a mortgage from day one. The only difference is there's a huge amount of additional supporting documentation that a client requires to forward the documentation to their financial advisor, or indeed directly to the lender. I think why people think it becomes complicated is that at times, halfway through the process, they'll get another request for supporting documentation. It's much better on day one to give the client a shopping list of what's going to be required to go forward. It's all too easy to blame a lender for not acting quickly, for sitting on the case. But until the advisors advise the clients that nothing will go ahead until all of the supporting documentation is collated, the case will be stagnant. It will just stay there. And the client understands that with regard to the finances, but what they don't have the same regard for is the importance of total project costs. So you need to have total project costs from your delivery partners. You need to look at the payment terms that those delivery partners require. You then have to work with the cash flow to enable that the lender release of funds together with the client's own funds meet the payment terms of the enabling partners. Obviously, they have to have planning permission, they need to have build regulation approval, they need to have site insurance, they're required to have 10-year structural warranty. But for so many of the people that are self-building and custom build, it's their first experience on this journey. And that journey is actually made much easier when their advisor fully understands what the individual lender requires, relays that to the client at an early point, and the client starts to collate the supporting documentation. But the crucial part here is total project costs. I say to so many people, okay, if you were to lend money, what would the 3 questions be? And the 3 questions are, how much do you want to borrow? What it's for? And how do I get my money back? And that's exactly the same as lending institutions. It's not complicated. The principle is there. So it's not difficult. But before an introducer suggests to a client and starts to provide advice on the most suitable lender to meet their needs, the introducer requires to have knowledge of the method of construction that that client wants to construct their property with. There are some lending institutions who do not accept modern methods of construction, who do not accept, for example, over 40 or 50% exterior cladding to be timber. So there's no sense carrying out a decision in principle with a lending institution who ultimately will not lend because it doesn't meet their lending criteria with regard to fabric of the property.
Well, there we go. That was Mary's second video. Hopefully you heard that one. I didn't hear back from anybody, so I'm presuming you heard that this time. So let's pick that up a little bit. There's a few bits in there that I really want to talk about. Tony, I'm going to jump to you straight away on paperwork. Mary brought something up there that I think we talk about a fair bit, and that is how the broker is submitting their documentation. Can you give us a little advice to those brokers on the importance of getting that information right?
Yeah, obviously, the more, the more granular the detail we have, the quicker and easier it is for us to make a decision. So, we find, with self-build, you have to submit a supplementary form telling us all about the project, experience, etc., before we'll give you a decision in principle answer. Because we could just say yes, and then, as Mary's just said, if it's not something we can do, then it's a waste of your time, quite frankly, and just disappointment for your client, and you have to go elsewhere. So getting that detail right is absolutely spot on. you know, we also within our system have a notes page, so you can drop any, you know, outside of the questions we might ask on a decision in principle. If there's more to tell us about this project that makes more sense to us to enable us to make a reasoned decision, then do add it. Just add in as much as possible. Tell us the story. You know, our guys are good, but they're not mind readers. You know,
that's fundamentally it, isn't it? Really, there are people that there's an individual person
100%.
looking at that, especially a self-built underwriter at that.
Yeah.
So you need to give them the stories for them to be able to know what's going on.
Yeah, and we turn around stuff fast, but I think, you know, with complexity comes a bit more head scratching. So, you know, and self builds do take longer because of the very nature. There's more at risk for the client and the lender in getting it wrong. So we do take our time, but give us all the detail and we get back to you as soon as you can. And if you're stuck at the front end, ring Holly's team, you know, speak to the field-based team. Everybody's here to help you.
Mary touched on this as well. It's along the same lines, but it's also how you save the documentation. You're uploading documents, making sure. Holly, you've mentioned this before about saving the files in the right wording, so that actually they're not scrambling around trying to find a document because it's not saved in with the same name as previously. Sorry, Holly is still with us, guys. Her camera's just decided that it's time to go to sleep. So, Holly, what advice can you give on sort of those documents, naming and getting those through quickly?
I think the key thing on our system is that when you upload through the mortgage portal directly to the case, is that you can really clearly label them. And that's, you know, that's really what makes it so much easier for our processing team to pick them up and get them signed off for you. You know, we've got great turnaround times at the moment. We reduced them last week. So we're working, you know, up to 3 working days for your documents to be picked up by our processing team, and then a further 3 days for our underwriters to review his current turnaround times. And I think, you know, the quicker and the more clearly labelled, then yes, is the key factor with all of this. Lovely.
I'm going to go over to some questions, because I have some questions in from that. So any questions on documentation, what needs to be submitted, anything like that? We obviously, the guys know what they need, but if you've got any questions, think I'm not quite sure, pop the questions in now and we'll come straight to them. So from Simon Batchelor, do you have loan products to cover build costs only for a situation when the land is already purchased and the self-build is in the garden or the client's residential property? Second to that, are you able to provide a mortgage for the existing residential property to release the equity for the self-build deposit? The existing residential property to be rented after the self-build is complete. It's quite a complex set of variables. Do you want me to break out one by one?
So for the first bit, so we can take on, if for some reason the applicant was looking to build in their back garden for them to live in, so they prefer the bottom end of the garden, their original house, and then they're going to rent out their existing property, then that can be considered. But we would just want the plot to be split, so the titles to be split. And then we would also, we can help draw equity out of that value of the land in order to help the applicants get started. So that's one of the key things that we can do, is we can draw equity out of the land, but the build cost will still work in the same way of stage payments and in arrears. And yes, we could consider a residential remortgage where they're looking to draw equity out to start a project, whether it is in their back garden or later down the line. But that's when they're going to either use the property for family members to live in or to rent out as well. Anything else might be seen as too short-term financing, which we don't offer.
Lovely. I think that covered it, Simon. Any additional questions on that, do pop them in the chat room. From Jonathan Smith, questions on turnaround times at present. We have a self-build remortgage application with you for over $1 million, but going on for months. After you offered purchase for the clients could not wait and purchase the land. What are the cause of delays, please? Specific case. We can't answer a specific case, but
no, but we can set up
what could have potentially slowed it down.
Yeah, and I think the one thing that we do need, and what would slow down any project if they've looked to purchase the land without waiting for our funding to come through, is that we can consider remortgages within 6 months. So you have to change the application process and switch it to a remortgage. But you've also got, we cannot complete on this until our legal charge is shown on land registry. So we could be impacted by delays in land registry, which a lot of areas are still impacted on. So we cannot register our legal charge without them shown as registered owners on land registry.
Okay.
That could have been a reason why, particularly on this case. yeah, we can always look into it for you after the call today.
Jonathan, maybe if you could get in touch with Holly or any questions, or with your BDM, we can pick up and discuss from there. So from Dan, what happens if a client receives an offer and has started drawing down some of the funds from you, and then a change to their income which could affect affordability occurs whilst the build is taking place, and further large stage payments are still required?
God, definitely an interesting one on that one. So for existing customers, they would come back to us, to the servicing team in particular, and then they go through sort of their available options. As a new business team member, I'm not able to comment on the full process. But yes, if they are looking for, if there is a change in income and affordability, it could have an impact on their case. But it's definitely worth the customer calling back into the servicing team and starting the process from there, and just letting them know what's changed, and see what is available and offered to help.
Lovely. Quick one from Rosanna. Really good point, actually. This has never come up before. Can a self-build be considered where the applicant is to complete part of the work themselves?
Yes. So some of our self-builds, they may have, the applicant may be a carpenter or a kitchen fitter, or they've got a certain area that they want to do themselves. That's absolutely fine. You just have to factor it into the breakdown of works and costings. And also, if they're doing, say, for example, they're a self-employed builder and they want to do part of the building works themselves, what we would probably question is, whilst they're doing the works on their own house, will it have any impact onto their own income or their current work levels? Are they able to carry on 2 projects at the same time, and things like that? So it's not an outright no. We just need to know what they're looking to do themselves, and we would just factor it in to the works and costings.
Lovely. I'm going to ask you a question about the stage payments in just a second, but I've missed someone's question. If a client owns the plot with no borrowing, is it possible to lend in advance rather than arrears?
No, so for us, we would still, all of our stage payments always work in arrears currently. But one thing that we can do is, if it's a remortgage, so they already own the plot, is they can draw some equity out of the land to help them get started. So that's a key thing with our remortgages that they can do.
Okay, the questions are coming in again. So we'll get around to the stage payments, because there are going to be some of you listening or viewing that I don't understand the stage payments process. So we'll come back to it, but I'll just get the questions done for now. Are there ERCs for the self-build rates, as I have a client who wants to remortgage as soon as possible to secure a lower rate?
The fantastic news with all of our self-build products are they are ERC free.
Well, there you go. Short, sharp, but perfect answer.
the shortest answer you've had today.
Poor Tony's like looking a bit redundant. I'm going to get you, Tony, I promise.
No, I'm really happy it's not here. It's good.
It's great. He's just taking a middle smiling away. You've got Mark's just coming on what we've just discussed, Holly, with regards to somebody building themselves. But if they're not a tradesperson themselves, but a competent DIYer, is that still acceptable?
It would depend what they're looking to do. If they're looking to build the house, probably not. But if they're looking to do some of the internal fittings that they may be able to do, then we might consider. But it's painting that picture. As an intermediary, the key thing that we say with all of our cases is to paint the picture to us, tell us the story. What are they looking to do? You know, what experience have they had? Who's project managing it? You know, is it probably with the contract for the building cost, is it a fixed price contract, or what they call a JCT contract? All of these questions that we will ask, but the supplementary information sheet really does cover it well. So it will break down the project for you. And even if it's something where you are, it's just an initial data capture form from the customer, please feel free to use our form. Because it will really help you ask the questions that you would need to on any self-build, and sort of get the customer starting to think about what they're looking to do. Because we do know that sometimes the cases come and they might be very Grand Designs-esque and just trying to work it through. So it's a really good data capture form, if I say so myself. Might be biased, but it's really helpful for intermediaries to use that resource.
You just set me up beautifully, Holly, because I'm going to put Tony on the spot finally. In that, Holly just mentioned Grand Designs-esque. Now, normally we would say we're more the Homes Under the Hammer element of the TV programs, but actually we're not anymore, are we? So let's talk about some large loans. Do you want to talk about the new large loan product?
Yeah, definitely. We launched our large loan product back in June. So for that, we recognised there was an opportunity to support those who were looking to build their own home between 1 and 2 million. So we launched our large loan offering, and actually we can go beyond the 2 million. We can go up to 3 million, but over 2, we kind of bespoke the rate depending on the deal. But no, we're seeing healthy interest in that market. I was quite surprised at the number of people who are looking at significant development for themselves, you know, in terms of their family and new ways of living. So yeah, we're really here to support.
Can we just talk very briefly about the fact that if we are talking self-build is quite a strange name, really, because it does talk, we can do restoration. So actually a big restoration project, is that covered by the large loan self-build mortgage? Tone?
Yes. Yeah.
So just like a barn conversion, for instance, let's use that as an example, you know, the large barn unused, is that's still classed as self-build, even as a renovation or even a minor renovation can still be covered by a self-build loan?
Yeah, Holly can confirm that for me, please, would be helpful. But it's, you know, in terms of our appetite, as I said, it can be build, knock down, new build, restorations, but the whole lot. And that, you know, it's just the large loan pieces will lend you more for the bigger projects.
Holly, this is one for you. Can you, in layman's terms, in the simplest possible way, as somebody who doesn't understand the stage payments thing, because I'm not a builder or I've not been in the market, so could you just break it down for me what the stage payments mean?
Yeah, so for us, the stage payments are, we will provide funding across the project, but at set periods of time to suit the applicant's needs. So the stage payments are flexible because, as I mentioned earlier, we take on a variety of different projects. So we can take on ones that are midway through, completely new builds. They could be knockdown rebuilds. So we can, we're flexible and we're guided by the applicant. So you would apply saying that you would want a number of stage payments, and then we would go through and say, yes, we're happy with that, or the build is quite complex, we might ask for one further stage payment. But we have no maximum number of stage payments. We do have a minimum. So you do have to do one initial drawdown and one stage payment as a minimum. But the rest, you could have as many as you want. We've taken on projects where they've wanted a stage payment every single month because they wanted us to be a bit more hands-on, and it was quite a complex build. But we've had some where it's a self-build that's nearly finished, but they need some extra funding. So we've had to do the initial drawdown and one stage payment. So it's a variety of different things that we can look at. But the key thing is that we will always lend in arrears. So we will ask you to complete the work. We will go out, we will re-inspect, and then we'll lend that money back to the customer. But the key thing with Saffron is we do flexible stage payments rather than fixed, because we know that set stage payments don't always work for different types of projects.
So do you want to, let's talk about some criteria then, Holly, what and what they get. What's the current LTV on your products, and what can they look to get from a Saffron self-build product?
Yeah, so you'll be looking at on the cheaper rate of the two products, you'll be looking at 75% loan to value as the overall of the gross development value. So when you apply with Saffron, you might hear us talk about different values. So we'll talk about the plot value, the current value, and the GDV, which is gross development value. And that's what it'll be worth once all the works have been completed. And we will lend up to 75% of the gross development value overall. And our slightly more expensive product is up to 80%. So the 75% product will lend 65% initially to help them purchase the plot, up to 100% of the build costs, and then that can't exceed 75% of the gross development value. And the 80% product is really simple. It's 80% of purchase price, 80% of build costs, and cannot exceed 80% of the gross development value. Now, those loan to values also are the same on the larger loan products as well. So it's easy to understand there's just a different loan size product for loans over $1 million.
Brilliant. If you've got any questions on that, we've still got 10 minutes left. So you've got questions on that, please do ping them in straight away because they're coming in thick and fast. So, question from Philip: would you lend if there's Japanese knotweed on an adjacent plot?
So that would be subject to valuer's comments, because if there's Japanese knotweed on the plot itself, it's an outright no. But if it's on the adjacent plot, it depends on the impact it could potentially have of going into the other plots. So that one, unfortunately, is subject to valuer's comments.
Great stuff. Okay, from Claire: do you withhold the last 10% of the total facility until the property has been signed off, like other lenders do?
No, we don't. So it's the stage payments. You know what you're getting from the outset, and when you begin it, providing the works have been completed.
I put another question to Mary, but sadly we didn't have a recording for that. So I just want to chuck a few questions to you, Holly. Sorry to keep chucking questions at you, but we talked about contingency budgets and a requirement for contingency budgets, because obviously, as people have already mentioned, the cost of building materials is going up, time might stretch out, might be a lack of workforce for your contractor. There's so many different variables and little unexpected things that can be chucked in. How does Saffron support the broker and borrower during that period?
So I think the key thing initially, there's two real points on contingency funds. One is the applicants getting a JCT contract, so a fixed price contract for the works that are being completed. So that really does protect them from the outset. They'll sign the contract with the builder, and those are the costs that they will be liable for. With the contingency fund, it is really important. We definitely stipulate that on our larger loan product, that they must have a minimum of 5% contingency fund factored in to cover any sort of overrun costs. But I think with anybody, it's worth them thinking about having a contingency fund ready and available, because as we all know, and I think Grand Designs is always a fantastic example, is that no project runs smoothly, no project runs to cost, and you're always going to sort of have those unexpected hiccups along the way. So it's always worth them thinking about that rather than not thinking about it, basically. But fixed price contracts, the JCT.
Exactly why I asked you the question, because the Grand Design really shows us just how difficult these builds are, doesn't it? And shows how volatile it is. Mary actually recommends them. She recommends, Tony, a between 10 and 20% contingency fee. Does that seem feasible? Is that?
Yeah. Well, I think it's that we am and are on that in terms of our policy, and that's why we set at 5. But yeah, ideally, 10 to 20% is probably a safe figure. What we're experiencing at the moment is a lot of people coming to us to remortgage a self-build because they have run out of money, because they don't have a contingency. And what Grand Designs does show you is people sometimes take the wrong approach to getting extra cash by racking up huge credit card debts. And paying potentially large amounts of interest on those, as opposed to considering finding a lender that will happily take on, the remainder of their build for them, and which is something that we're happy to consider all the time. In fact, we do a lot of it. So that's a key thing about contingencies as well, is don't just look to your credit cards as the answer. There are cheaper options for you.
That was gonna be our next question. She covered it beautifully. And on that, if their new budget, so their overspend goes from one product to the next, and so they can remortgage up to the large loan product, I presume, Tony. So say they went from like 999,999 to £1,005,000.
Yeah,
the jump between
provided the whole project and the finances and the affordability stack up, then yes, no problem at all.
Brilliant stuff. Message from Claire. Quick question. With regards to stage payments, I knew this was going to throw out some questions. You mentioned that you can lend 100% of the development finance, but is that capped at 75% of the build value at each stage?
Yes, so it's based on, with our borrowing, they cannot, at any one time, they cannot borrow more than 75% of the value at that point. So that's just something to bear in mind. So the property's got to value up as it goes through.
Lovely. A question from Neil, because I mentioned the barn conversion. For this building being on existing land and in the garden, for instance, would a separate title deed need to be in place in order to lend?
Yes.
Yeah.
short and sharp. How do you treat the current residential mortgage rent for affordability? It will cease close to completion, but do you count as a commitment?
Yes, we do. So we will have to factor in their living costs during the build. So if they are living in their existing property, moving into a rental, or moving to somewhere where they have to pay costs, then we do need to factor it in. But if they are moving in with family rent-free or actually moving onto site in a static home, then we can consider not having to factor in that commitment, because there shouldn't be any.
Wonderful. We've only got a few minutes left, guys. We do have some last bits to come from Tony, but I will quickly get through your questions so we're not leaving anybody hanging. Do you entertain border oak build properties? Build costs are a circa 750k.
That is one I'll have to look into and come back to after the webinar.
No worries. Jason, if you would like a direct answer from Holly, just drop a private message to us with your email and we'll come straight back to you. A final one from Dan. Assume proc fees are paid in stages 2.
No.
No.
So it is paid.
Upfront.
There you go. Tony's answered that one.
So we pay the proc fee based on the full project on the initial drawdown.
There we go. So, Jason, I hope that answered your question. I think I've done everyone's questions, which is quite impressive. So, coming thick and fast. We haven't actually covered everything we wanted to cover today. So, it just proves that we need to, give you guys more information. We are working on projects. And, Tony, I think, we are going to be looking at self-build because most people now will be thinking now's not the right time to build. But there's absolutely no harm in them purchasing the land while it's cheap from, say, local councils getting rid of brownfield land and the land is cheap. Surely now's the time to be looking at and begin the process. Yeah,
I mean, it's whatever suits that individual, isn't it, at that point? So, if there's an opportunity to seize now and you want to do it, then, yeah, I say go for it. There's a raft of resource available to you from, the Mary's, the Self-Build Federation and et cetera, and from lenders and from local authorities. There's all sorts of people there to help. What they say, leap and the net will appear, I think is the phrase to use. There's always something there, so have a go at it.
Love that.
Yeah.
Okay, we are running out of time. Thank you, guys. I know an hour is a long time to take out your day. We really appreciate your company today. Just very quickly, Holly, some contact details for you guys so that anybody that's watching today, any questions on self-build, how do they get in touch with your team?
Yes, so please do call us on 01799 582 925. Alternatively, you can email us at bdm.enquiries@saffronbs.co.uk. If you have missed those, there is the contact us page on our website where you can send through your requests on our request form and that will come to us directly. Alternatively, we have got our fantastic live chat functionality, which if you go on the Saffron for Intermediaries website, it's in the bottom left-hand corner and it just says click to chat. And the team are available from 9 till 5 on our live chat as well.
Lovely. And very quickly, Tony, get registered is our answer, isn't it?
100%. Yeah. Get yourself, if you're not already registered to use our portal, please do, because that's gets you straight into being able to submit your cases when you're ready. But it also enables us to keep in touch with you because once you're registered, you're on our list and we can keep you up to date with product and criteria and proposition. So if you go into the top right-hand corner of the SFI homepage and there's a register button you can click on and that'll take you through the journey.
Lovely. If any of you thinking of delving into the self-build market and you've picked up a lot of information today, but you think there's a little bit more, drop us a quick message or drop an email to Holly and we'll keep you updated on anything we're doing over the course of the few months as we go into next year and there's more chance of sort of getting you build off the ground. And those clients that come to you, we want to arm you with everything you can possibly have to make sure that you can answer any questions your client might put to you. And then, excuse me, but if you get registered, as Tony said, we will then keep you informed every time those new things come forward. So that's it. We're 20 seconds away from our full hour. So sorry, guys, we do have to go. If you would like a CPD certificate, please pop your name in the chat room now. and those will be emailed over to you. And then likewise, if you'd like any CPD information, we will include contact details in there as well with your certificate, so you can get in touch with us. We're back again next month, so roughly 4 weeks away. So do check us out. Follow us on all our social media channels. You can find the links on the Saffron for Intermediaries website. Likewise, we do have a brilliant SFI Not So Live podcast. We're on series episode 3 already. They're available to download from Spotify, Apple Podcasts, Google Podcasts. So just go onto our socials and find those. Thank you so much for your time today. Over 100 people, which we're really chuffed about. And likewise, we'll get to you with questions as quick as we can. And to your questions as quick as we can. So Holly, thank you. You are still there, I presume?
Yes, still here. Just I feel like I'm on an episode of The Masked Singer, but without the talented singing. So yeah, apologies for my technical issues. I promise next episode you'll be stuck with my face for the whole hour.
Yeah.
And Tony, thank you.
Thanks for me, and you probably wish I was on The Masked Singer rather than seeing me. So the yin and yang of Holly and Tony.
There we go. Thank you so much, guys. And thank you, everyone, for watching. We're back again next month. Look out for your registration and join us, and we'll have a topic for you next month. We are talking, I believe, we're talking self-employed and criteria change and a few other things. There's some really, really important product news coming at the end of this month, and we will discuss it in detail in next month's webinar. So if you would like that, again, use the chat room, pop your email in, and we'll make sure you're on the list to get registered for that. So that's it from us this morning, now afternoon. Thank you very much for joining us, and we'll see you next month.
Thanks,
everybody. Bye.
Bye.